Welcome back to another episode of Morpheus Crypto, your home for no-nonsense technical analysis of the top crypto swing trade setups to help you trade with confidence. A tug of war between the bulls and bears has been heating up in recent weeks, causing lots of whipsaw price action and roller coaster type movements that, quite frankly, has been a challenge for most swing traders. However, the consolidation pattern of the past 3 weeks is bullish and could soon lead to a breakout to new swing highs. In today's video, we dive in and take a closer look at the charts of Bitcoin and Ethereum and show you the key levels to watch that may determine the market's next move. We'll also highlight the charts of leading altcoins that may be setting up for potential swing trade entry, including taking an updated look at Litecoin, LTC, which we highlighted in our last video as a pullback trade set. First up, what's up with Bitcoin? Well, let's go ahead and zoom in to the shorter term 4-hour chart to get a closer look. Each bar that you see here represents 4 hours of price action. And we can see that back on June 20th and 21st, Bitcoin had that breakout that took it from the 26,000 area all the way up to a high of just above 31,000. And since then, Bitcoin has been trading in a sideways range near its recent highs, known as a consolidation pattern. And consolidation pattern is also known as a correction by time because rather than a pullback, it enables the moving averages to rise up and provide support while the price action digests its recent gains in a sideways price pattern. Now, the issue is that when you have the price action in a consolidation pattern, it can be very choppy until we actually break out. And you can see here that the 31,000 level has definitely been a major resistance area for Bitcoin. In fact, we see 7 different occasions, 1, 2, 3, 4, 5, 6, 7 different times, and today makes 8, that Bitcoin has tried to break out above that 31,000 level. Now, a few times it did pop above the 31,000 level up to about a high of 31,400, but notice that every time the price action did not stay above 31,000 for more than just a 1 or 2 bars. Here we had about 3 or 4 bars, but not very convincing. So definitely that 31,000 to 31,400 area is a key level of resistance to watch. Now, the positive is that each test of a resistance level does weaken the resistance. So every subsequent test increases the odds of the breakout actually sticking. So with 7 times now, we've tried to break out above this level. So we do believe that the odds are getting good that we're going to break out above this level soon. And the odds favor a move to the upside because of this bullish consolidation pattern. Zooming back out to the daily chart, we can see that the price has moved back above the 10 and 20-day moving averages, the green line and the blue lines here. So that's positive. And we're once again testing this 31,000 level. Will Bitcoin break out above the 31,000 level and stick this time? Keep an eye on volume for clues. We want to see the breakout powered by high volume. Volume is always the gasoline behind successful breakout attempts. On the downside, obviously, we've got support at the lows of this consolidation over the past 3 weeks. Definitely wouldn't want to see the price action get below that level. In fact, we wouldn't want to see the price action get below this reversal day a couple of days ago. So essentially 30,000 is a key level in the short term we need to hold. And on the upside, as I mentioned, watch the 31 to 31.4 area. And until we get a definitive breakout of this range, either above 31,400 or below this level, be prepared for continued choppy price action and whipsaw movement that can be challenging. So make your stops wider to adjust for the volatility, but be sure to reduce your position size to compensate as well. By the way, this video is never financial advice. This is just showing you the chart patterns and what we see when looking at the chart. Ethereum, ETH, is a proxy for the overall health of the altcoin market. And we can see here that Ethereum has been a choppy, sloppy mess over the past several weeks. On the daily chart, we can see that the 1930 level, this horizontal line, is short-term resistance to watch. We can see that back earlier in July, the price action did pop above that level for a couple of days, but the breakout failed. And we came back down, stalled off pretty sharply, and the price action found support right at that 50-day moving average. As we often mention, the 50-day moving average is a crucial indicator of intermediate term support that can be used for setting stops very frequently. So Ethereum, we want to, as we mentioned, that 50-day moving average is a key indicator that's used by institutions as an indicator of intermediate term trend. And we can see here how well the 50-day moving average has done at catching the price of Ethereum, holding very firm at the 50-day moving average. Now, over the past week, it's been very choppy, and the price action has been below the 10 and 20-day moving averages. But today, we are seeing slight relative strength in Ethereum versus Bitcoin, and the price is trying to reclaim these moving averages. So if we can get back above this 1890 level, actually, we should say back above 1900, above the high of 3 days ago, then the short-term momentum could flip to the bullish side for Ethereum. However, keep in mind, we've got a lot of overhead resistance all the way up to about the 1965 level, but 1930 being the key pivotal level to watch here. So again, Ethereum looking bullish at the moment, but beware of this overhead resistance, especially the 1930 level. As for support, we wouldn't want to see the price action go below this 50-day moving average, below 1840. Until we get a definitive breakout above this range or below this range, be prepared for continued choppy price action. In our last video, we showed you the bullish trade setup in Litecoin. Let's go ahead and take a look at what's happened since then. Litecoin, we entered in the Morpheus Crypto chat room. We sent a notification to members that we were buying it just below the $95 level on July 10th. And we did so after the price action formed a bullish reversal candle on the undercut of its 20-day moving average. And the price also found support of this uptrend line from the lows of June. So we were buying the pullback because of this big volume breakout that we had on June 30th, and we had a nice pullback to give us a low risk entry point. So we're currently long from just below the $95 level in Morpheus Crypto. And since then, the price action has been in a very tight range. We've got a volatility contraction here right near the highs of this bullish reversal candle. And you can see this horizontal line we drew here at 98.35 marks the highs of the past 6 days. And if you actually if you missed our original entry point, you could actually look at buying on a breakout above this horizontal line. Just beware, we've got the 10-day moving average here at $99.10 currently, but that's dropping. So this 10-day moving average may soon converge with the 98.35 resistance level. So again, if you missed our original entry in Litecoin or you're not a member, then you could consider an alternative buy point above the $99 level. Give it some wiggle room here to trigger. And of course, you want to keep your stop in place below the low of this reversal candle. We wouldn't want to see the price action come back below this level. And potential target, we'd be looking for to sell part of the position on a test of the prior highs around 115 and then trail stop higher on the rest. So Litecoin looking real good, but we'll get confirmation of this bullish reversal after the price action moves above this 6-day high. Let's take an updated look at GRT. In early July, GRT had a high volume breakout. The volume was the highest buy-side volume for 2 days in a row that we'd seen in many months. So that volume really got our attention. And when we saw that high volume breakout, we began to wait for a pullback. And we got that pullback about a week later when the price action pulled back to convergence of the 10 and 50-day moving averages and provided a relatively low risk entry point. Several days ago, the price action undercut the 20 and 50-day moving averages and then formed a bullish reversal candle. So that may mark the bottom of this pullback. And if we look at the volume pattern, we notice that we don't see any higher volume selling during this correction. In fact, the volume has been declining on the down days, which is what we want to see. And now with the price action holding above the 20 and 50-day moving averages, we're seeing a bit of relative strength in GRT this morning. And if GRT gets back above the 10-day moving average, right around the 0.119 level, then we could see a resumption of this breakout's bullish momentum that we saw in early July. So as always, keep an eye on the volume. If the price action gets above 0.119, then we'd want to see the volume confirm the move by volume surging higher as well. So we do like the risk reward of this setup. If you're not in this setup, you could get in here and keep a tight stop just below the 2-day low, which would put the price back below the 50-day moving average. If you wanted to go a little bit more loose, you could go below the low of 3 days ago, the low of this pullback. However, given recent choppy market conditions, we'd rather go with a wider stop and smaller position size. So GRT, the stop, like I said, it can be relatively tight, and the potential reward, if the price action gets anywhere near the prior highs from the recent breakout, we're looking at least a 4-to-1 risk reward ratio. So we want to see generally at least 2-to-1 risk reward on our trade setups, meaning that the potential profit is at least double the size of the risk to the stop. One last thing about GRT is that yesterday the price did form an NR7 day. NR7 day is the narrowest range of the previous 7 trading days. And an NR7 day is a volatility contraction. And what it indicates is it usually precedes a volatility expansion or breakout. So when we see the price action move above the high of the NR7 day, that's typically a buy signal that could lead to an explosive breakout. So we see now that GRT is creeping above the high of this NR7 day, so we'll see if we get any follow through. But this NR7 day, if you want to learn more about it, check out the MorpheusTrading.com blog, and you can do a search on there for NR7 day and find out more about how NR7 days work. Let's take another look at AVAX, which we highlighted in our last video as well. AVAX has been pulling back over the past 4 days very, very slightly and holding on to support of the 50-day moving average now. Notice that the 10, 20, and 50-day moving averages are all converging together to provide support just below the current price of AVAX. So when you've got moving averages converging together, the support of the moving average becomes even more powerful. The more convergence, the more powerful. Now, we also see that the volume has been lighter. It's been declining on the pullback, which we also want to see. That's bullish. But we do have this resistance right around 1370, which is the failed breakout level from a couple of days ago. So if you wanted to look at a safer entry in this rather than if you're not already long, you could wait for a move back above the 13.7 level, which should enable a resumption of the breakout attempt from a few days ago. Now, despite the support of the moving average convergence, it's not uncommon to see an undercut of these moving averages before the price goes back up. We saw that with LTC and we see it with many setups all the time. Generally, people set their stops below these moving averages, and the smart money wants to run those stops to collect the liquidity at lower prices. So AVAX, don't be surprised if we get a quick washout down below the $13 level to run stops, followed by a reversal back up above that level. Now, if we break down below this level and don't snap back within 1 to 2 days, then this setup is invalid and we've got a failed breakout. But for now, we do like this setup. And again, we can look at a low risk entry point on a move above the 13.7 level. By the way, one of the most basic tenets of technical analysis is that a prior level of resistance becomes the new support after the resistance is broken. And you can see that's exactly what happened here with AVAX. The 50-day moving average, the red line, was formerly acting as resistance, but after we broke out above that level last week, now that 50-day moving average has become support. And of course, the opposite is also true, that a prior support level will become resistance if the support gets broken and we try to rally back up to it. KAVA is not on our relative strength watch list, but it may be in play for a quick pop after breaking out above a multi-week base of consolidation and moving above its 50-day moving average. We can see here 3 days ago when the price popped above the 99-cent level, volume spiked higher, and now KAVA is on a small pullback. Keep an eye on the volume in the coming days for clues about whether or not this breakout will have any momentum behind it. Again, it's not on a relative strength watch list, so it's not a top tier setup, but could be good for a quick pop depending on the volume. So watch the volume for clues about Kava's next move. And last on our list today is SOL, Solana. Solana was a former leader in the 2021 bull market and actually sold off sharply last month when the SEC listed SOL as one of the altcoins on their list of what they consider to be securities. We can see we had a big volume sell-off, and that's what makes it all the more interesting that the relative strength of SOL has been increasing despite the news that the SEC finds SOL to be a security. Traders have said, never mind, forget about that. And the price has moved all the way back up to the prior highs. So SOL is not set up right now for buy entry. We like low risk buy setups such as a pullback or a breakout from a base, neither of which SOL is currently showing. However, the relative strength has been increasing and SOL should be on your watch list for potential entry on a pullback. If you enjoyed today's video, we'd appreciate you hitting that like button. Don't forget to subscribe and turn on the notification bell. And if you want to find out more about Morpheus Trading's crypto services, head on over to morpheustrading.com, click on Crypto Picks, and while you're there, check out the blog. Lots of great educational information on our blog, especially about NR7 days. We'll see you back here in our next Morpheus Crypto video. Thanks for watching.